And good day. This is the Eye of the Storm podcast with the big picture technical update for the NASDAQ 100 and the S&P 500. It's being recorded on Saturday, December the 30th, 2023. I'm going to begin with the NDX today. And this is not a lot to be updating over what I presented last weekend with the big picture technical update with the podcast. And so just picking up basically and updating the situation and then adding last week's trade, which was not necessarily significant, but it does draw a lot of conclusions as to where we're going to start the new year and likely how long that may take. So just to do a quick recap, the NASDAQ remains within the formation of a cycle degree fourth wave. And that, of course, is going to consist of a primary degree A, B, C. Thus far, and in October of 2022, the market completed primary wave A. So from that point, we have been in the process of tracing out a primary B wave counter trend rally. Now, within that primary wave B, there will be an intermediate degree A, B, C, of which we have A and B done. In fact, that intermediate B wave completed in December of 2022. So from that point, we have been in, again, a stronger up phase, but an intermediate C wave within the primary B wave. And within intermediate wave C, there are going to be 5 waves of minor degree, of which we have complete minor 1, 2, 3, and 4. So we remain inside that minor 5th wave to complete intermediate wave C and in turn primary wave B. So I'm going to drop it down real quick. I'm going to bring it down to that daily chart so we can start to look inside. Now, one change that I made during the week was I shifted the minute degree 1, 2, and the 3. And by that, what I did is a wave 1 becomes the extended wave. Wave 3, which I believe completed last week, I think Thursday or Friday, maybe, I think it was Friday actually, completed the minute third wave. But in any case, it does right now not put a tremendous amount of pressure, but it does put some pressure on the 5th wave, being that wave 1 continues, I believe, to be the longest wave thus far out of 1 and 3. Now, just to recap what the rule states, what Elliott wrote and considers a rule that we follow, is that between waves 1, 3, and 5, within an impulse move, the 3rd wave is most often the longest and the strongest. But the rule is that wave 3 cannot be the shortest wave out of waves 1, 3, and 5 in an impulse move. It has a little bit different spin if we're in a triangle, particularly a diagonal, to where waves 1, 3, and 5 will all come in as 3 waves, and wave 4 will overlap wave 1, and wave 3 may not be the longest wave. Still can't be the shortest, but it may not be the longest. So again, even within the context of how I am counting it, wave 3 will likely not be the shortest. So the daily. So we're in waves 1, 2 complete, and we were in minute wave 3, which will consist of 5 waves of minuet degree. So now I'm going to bring it down again, and the 4-hour chart kind of shows some of the breakdown. But I'm just going to go ahead and take it right down to the hourly chart, which again brings us to wave 2 and then up to wave 3. So here again, We have minuet 1, minuet 2, minuet 3, and then minuet 4. I can just bring this over just, I need to activate. And bring it over a little bit so that it's more conclusive of where it ended. And the same with this one. I'll just bring that up to right in there. So minuet 3, minuet 4, so minuet 5. Now, minuet 5 is its own little beast. And the way I'm kind of looking at it is you can kind of say ABC 1, ABC 2, ABC 3, ABC 4, and a 5. Now, excuse me, there was a chance that the diagonal would have still been in process, and it still can be. And how I would count that then is 1 to in sub minuet 1, sub minuet 2, sub minuet 3, sub minuet 4, because then we're in that diagonal. But it kind of really did come down too far. It just starts to overlap. Well, wave 1 would be up here. And so it does overlap wave 1. But now it almost starts to threaten the whole move. So I did not do that. I put the 5 in place, and then I put the minuet, minute wave 3 here, which lets this corrective phase unfold. I mean, it is an ABC down, and so I can bring this down. Let's just take a peek on the 30-minute chart, and you can see we get an A, B, and it got sloppy until we really started to drop mid-afternoon on Friday. So actually, it got sloppy starting from Friday. But still not really too conclusive, but I do believe that it continues to show that within this small internal count, within what I'm considering minuet wave 5, that it is more complete than it is still got upside to do. So we can see in here, even if I'm going 1, 2, and this is 3, and the 4 way down into here. And I believe that we may start with a continued drop. And if that's the case, we may start falling out of the realm of a fourth wave if we start to break below what I'm labeling as wave 4 for minuet wave 4. So I would not be able to really consider it as a part, the only other way you could do it, folks, would be that this is wave A of minuet 4, this is wave B of minuet 4, and now we're in a C wave down, of which we got 1, 2, 3, 4, and we got a 5th wave, which will likely come down and take out that low. So we may still get down to here, and still, if I had to, I could probably consider it a minuet, but I'm not at this moment. I'm leaving it up on the minute degree, and this is minuet A of minute wave 4. And B still might have a little bit more upside. We may start up on the 2nd of January and then come back down, or we'll just continue to go down and put it in, and that would leave the minuet B here of 4, and then we put in a C wave of 4, and that would be expected to kind of like eventually find its way down here. Because again, even though a minuet 4th wave would be expected to find its terminus, its endpoints within the minuet degree 4th wave, or the 4th wave of one lesser degree, and that is the minuet. And so we have this area right in here that is the high candidate, and we're already into it. We're midway. So that's about, no, midway would be about right there. So where the 200 intersects at 16,722 would be about 50% retracement. But if I'm measuring out on the minute degree, I have to go back out. Let me just go back out here. What we have is we're running the fib retracements from the completion point of minute wave 2 up to that top for minute wave 3. And that would suggest that 0.382. So 16,482 But again, using what Elliott gave us, we actually have 16,552 down to 16,482. So we got a 70-point window for the C wave to complete. Now we may again, this is ABC for A. We might have an ABC that brings us back close to that high and then put in what we would consider a flat, or we get up a little bit higher and then we still come down, 5 waves down, more of a zigzag type of a deal. But this actually is 3, which leaves us more in the flat versus a zigzag. The C wave will always be 5 waves, but in terms of what we're going to be looking for here, it could be just go up and then come back, and we'll be back down to here. Maybe we get down towards that level, the 0.236, and then that would be minute 4, and then we start rising in a minute wave 5. Now again, minute wave 5 brings us up to where we'll be in completion, right? There's minor 4. Minute wave 1, 2, 3. We're looking for that 4th wave and then a 5th wave, and then we're done. So there is our first resistance. So we're looking at minor wave 5. So let me pull it back again. Look at that 2-year, daily 2-year. So here are our fibs coming out. For minor wave 5, we've already surpassed one equality. And so the next up for the minor degree on a fib level would be 1.618, and that is 17,633, 634. Now, once I get a 4th wave in here, then I'll be able to run wave 1, right? So when we're ready to go into minute wave 5 up, then I can put the fibs up, which would show the relationship between minute wave 5 and minute wave 1. But right now I don't have that level, so I can't put it in. So that's yet to come. What we do know, though, is that on the minor degree, our next level is 17,634. We're coming out here to the C wave. What's next for the C wave is 4.236. So wave C would be 4.236 times the length of wave A. And that comes in at 17,382. Again, we're starting to get into areas where it's like, okay, we're building a little bit of a cluster here between the minor degree 5th wave and the intermediate degree C wave. Now, what do we have out here? 1.236, which is the primary degree. That is where primary wave B would be 1.236 times the length of primary wave A, and truly give us that irregular B wave. That's the first measurement for the irregular, and that's 18,257. Now, can a 5th wave really extend up to there? Yeah, it can. It can. Now, one other interpretation that I want to share. This interpretation came to me via a subscriber who I've been in contact with for a while, and we share accounts. And what was presented was a count that I've had in the back of my mind, and that being that what we're really going to be running through for minor wave 5 is a diagonal triangle. And what is formed thus far would be wave 1. So again, what that does project, and I'm just going to go back out to my weekly chart, what that would then project is where we have much stronger upside potential under the context of an irregular B wave. But if this is going to be eventually form a diagonal, and what we have finished is ABC wave 1, then what we're likely in is a wave 2. Now, I think it would carry the same weight in terms of we would run our fibs from that low up to this high to figure that we probably would come back into here, possibly, or 16,000 It'll come down, and but we'd be looking for wave 2. Again, 3 waves down. And then wave 3 up, and then wave 4 down, which would still, you're looking at the triangle. You're looking at a triangle. And so we don't even have our trend lines to really kind of put in there. But it is a thought. There's, I believe, a possibility for it to actually play out that way. It would not be uncommon. We are finishing up a primary degree B wave, so it's a fairly large move. And for it to end in a minor degree fifth wave diagonal triangle, just kind of just work its way up in peaking either here or even higher, or it just works its way up and it just gets smaller and smaller and smaller until it finally reaches the pinnacle, and then that's it. We're already seeing where we have clusters and another cluster, and we would be able to fill in the blanks. Now, I would leave that, for me, I'm leaving that as an alternate count, not necessarily my preferred, but an alternate. So even bring it down, you can see it's a little bit cleaner, but the possibility remains. So I am going to continue with my preferred count is that we are dropping in a minute wave 4, and that we have a minute wave 5, and that then will complete the minor wave 5, the intermediate wave C, and the primary B wave. What we're yet to be determined as in which area. So my first cluster is right here. So 17,382 up to 18,258, 257, 255. That's all, you know. You always have to plus or minus on something this big, this far up. So, and depending on how strong, but I would then be expecting wave 5 to subdivide into its own 5, but that again, we'd be looking for that third wave to be pretty strong within it. So again, there's our cluster, our first cluster, and on a stronger push, our second cluster. Now, again, these numbers could change because we're still looking for, I'm going to bring it back down, I'm still looking for to see where this fourth wave will end up, and then I'll be able to put in my fibs for minute wave 5 against minute wave 1. And that could, because again, remember what I did is that I moved wave 1. So it's going to put a lot more power possibly behind wave 5. And, you know, even though equality's first, we still got that 0.618. And even if, let's, for example, let's just say that we reach, I'm just going to, this is a guesstimate, folks, a guesstimate. So we have wave 1, and now I'm going to bring it over, and we're going to just say wave 4 brings it down to there, but let's just say wave 4 comes down and smacks into that 0.382. Okay, so where there's 618, 17,754. There's equality, 18,539. And that's saying that it doesn't get beyond where the minuet fourth wave. So that's following Elliott, that it drops in, comes to 0.382, but we're just a little bit south of the minuet wave 4, all within the realm of reality. And you can see what wave 5 could look like. Again, don't know, don't have that endpoint yet, but this is a guesstimate. If it reaches 0.382, to show you what the fibs would tell us. So yeah, we have this even above, and then still we have one higher, so that 1.236 for primary 4, excuse me, primary B is valid. It's active. It has some reality to it. All right. I'm going to go over to the NQ. So it's going to be the same story. We are in the same count, intermediate degree C wave, minor degree fifth wave. Within that same deal, I believe that we've just completed minute wave 3. And those would have been at Thursday's highs, Thursday's late day highs. Oh, excuse me. So what have we gotten done? ABC. I'm only putting wave A. I mean, you're at wave A on this because it's a minute degree, but it leaves open the potential, right? I mean, it is an ABC. If it comes down and that's it, and we just start to rally, I will put a 4 there because guess what? We're inside the price territory of the fourth wave of 1 lesser degree. That's the minuet. So in essence, it could, if the market decides it just wants to start the new year, picking up the rally. I'm leaving open the potential that the market will ABC A, ABC B, and that brings that B wave back up towards 17,100. Come back down in the C wave, maybe here, maybe here, maybe no further than there. So we have our levels coming back down, but we dropped back down. Now we came down on Friday. We got to 16,936, 38 on Friday. So we were getting ourselves towards that low. And really, I thought to this low. So we had this low and this low. And it happened very quickly. And then they rallied it right back pretty quickly as well. So 16,936.38 was what got reached on Friday. Then we rallied all the way back and sold off a little bit. So whether this is really just an A, B, and we're going to come up in a C wave and then drop back down in an additional C wave, so A, B, C, B, drop down in a 5-wave C, yet to be determined. If we just start to rally off of this level and we break again, we'd have to break above 17,165, which was that high. Once that's been achieved, then we're going to be in that 5th wave. Then I would be running this against this. Now, that's the case. Let me just open this up because, again, we're going to run guesstimates here. That's all I got left I can do. Don't need quite that much. Let me go back to this one. So we're going to come down here. And I'm going to put it on, and I'm going to add here. Nope, wrong. Sorry about that. I'm going to go back out because it's minute wave 1. So it was out this far that I needed. So here we go. Now we'll get it down right there to here, all the way over to there. But it's going to produce some pretty high numbers. Again, we were guesstimating before. 618 is just below 1.236, right? 618, or excuse me, 62%. Equality is 18,903. Equality. If that level on Friday completed minute wave 4, then we should explode come Tuesday. We should just really start to move up, get above 17,165, and just keep on going. Because again, what happens? We're in new high territory again. We don't have any reference points. We don't have any reference points to say, well, it should stop here, it should find resistance there. All we have are fib levels. All right? There'll be measured moves. They'll throw those out as well. But for us, the measured moves come via Fibonacci levels. So we start to break out. I would look for a lot, the pressure to be to the buy side of short covering of anything else, because we're entering into unknown territory. We're on a 4-hour chart and look at, we would have relative strength We're not overbought. We're not oversold. In fact, we hooked higher in the afternoon. So, once again, it could be. And if it does, it should go very quick. It should break and go very quickly. So that would be the other side, because we did in the NDX, if I had to bring it down and we were doing it off of this line, we still have very high numbers. But this would bring it into a much different level. And the first being equality being the first, 618 is normally third. The other is 1.618, and we're talking 20,000. And I'd be like, that would stun me. Wave 5 would defend, wave 3 would definitely be the shortest wave. And actually, maybe not. But I just really would not look for that high. I really would not. And based on the fact that, wave 3 and wave 1, and we got to work all that out too. But those will be the levels there. I'm going to take this off because I do believe that it'll be an ABC, and we're going to get down a little bit further before we start to rally. I think we'll see a lot of position scoring come the first day of the year. And so we might see a little bit of an up, and then it comes down, finishes that, then we rally strongly. And whatever the market decides why, that's up to the market. So that takes care of the NASDAQ. Moving average is actually still in position. The 50 is just deciding now to maybe go a little flat there, but that was a pretty strong little down leg. So I would expect it. So, and that's the 4-hour. If I move it out to the daily is going to present us with a little bit different of a picture. We're still pretty strong on the upside. The 100 getting a little flat, the 200 getting a little flat, the 50 still angling higher, the 20, the the 8, both. This came down and closed just right on top of the 8, which keeps it in a little bit of a more positive, that it picks it up and goes up a little bit, maybe comes down, finishes that corrective wave, not really putting any pressure on the others. And then we go. So that's the NASDAQ. Let's go over and take a look at the SPX and the S&P 500. Now here, I've made an adjustment again. I was running the alternate account here in the cash market, and I've now, moved away from it. And so I've got, actually got one part. Forgive me while I just add that right there. And what I'm going to be looking at here is now the future and the cash are in the same path. So what we have is still within a primary. So we have primary A right here. That's the October 2023 low. And then we have ABC up for primary intermediate degree A. We have an ABC down for intermediate degree B, and that this entire move thus far is nothing more than an intermediate C wave to complete the primary B wave. So producing this fairly strong rally, but again, being a series of an AB and then the C wave. So within intermediate wave C, we are, again, we will have 5 waves of minor degree, of which we have minor 1, 2, and still, I think minor wave 3 is maybe done at this high. That is a new high. And I think over in the futures market, because it shows a little bit clearer, I put that finishing point here, but I'm leaving it open. I'm leaving it open here in the cash market because I think it could be a diagonal, strange and ugly as it is. And it might get like to 4808 to complete. So the cash market moving up to 4808 versus the high that it has thus far is 4793. So give me another 15 points or so to complete, or just go make a new high above that. Now, bringing this down to the hourly chart, you can kind of see it's not a real pretty picture. So it could be 1, 2, 3, 4 we have a 5 up. It'll be 3 waves, but it'll have a 5 up to complete around 4808. And if this is to run this, 618 is here. If I were to run it off of here, it's a little bit different because that would be where wave 1 ended, and that's where wave 4 ended. And it's a little bit backwards. So it's a little bit different calculation, but so I'm leaving it off, but I'm considering 4808 or pretty much anything above 40, 4793 would complete the minute 5th wave and then the minor 3rd wave. So now, what does that portend for our picture? What we have already on is for minute wave 5. So minute wave 5, which I believe is still in process, has actually that 4808, but then we have that 4818, and that is, and then 4821. So 18 to 21 is actually, to be true, anywhere between 4808 and 4821 could complete it. Now, what this number is here, this 4818, is the all-time high in the cash market. So again, like the NASDAQ, we're now waiting for the S&P to get itself up there and create a new all-time high, and that's above 4818. Now, whether it does it now or whether it does it within minor wave 5, yet to be determined. So you can see I'm leaving open the minute 5th wave to put the minor 3rd wave. So those are our markers. And then once we start to get that in, and one thing that I can put in, and is that where do we consider, I'm going to add our fibs for the C wave. And so what we have is here, 618 again, I think has not been exceeded, but it's pretty low. Actually, it has. Let me just dump the 618, because what we have is equality, and that's a 5219, and that's where the C wave would equal the A wave at 5219. Does not necessarily have to get there, but that would be the equality. We have a lot of other areas in between. So right here, we have for wave 3 at 4808, minor wave 3. That was the one to 4808, and then we have some in here. Now, once we have that, we have our 3rd wave in and our 4th wave, which again, bringing it back down like everything else, we should find its bottom here. So while I have for minute wave 5, equality is 4914, 618 is 4831. That's minute wave 5 to complete that minor 3rd. So we have a whole bunch. We got a bunch here. 4808, 18, 31. That's the cluster, and that's just to complete minor wave 3 in the cash market. I need to compare it. I'm going to go over to the futures market. You're going to see that minute 5 actually looks like it completed within a Globex session, which kind of tosses and makes it a little bit more difficult in the cash because the cash doesn't trade. So we might get a little bit, I'm going to have to wait to fill in that blank there to see, because there is the potential here as well. Here as well, I've got 1, 2, 3, 4, 5. Slight diagonal, or this is where it gets a little bit tricky. Right, so this is a 3, this is a 3, this is a 3, this is a 3, and this is a 3, and which is why I put the 5 up there. The severity of the drop was pretty clean in terms that it was an ABC. That what we have is a minute wave A, because don't forget we're in a minor 4th wave. I'm looking for it to come back down into the price territory of the 4th wave of 1 lesser degree, which is this minute 4th wave. And right now we've gotten to not all that much. So if I'm going to consider, here are the fibs for minor 4. 382 is 46.76. But I still am going to hold to where we are likely going to come maybe down to 47.40, 47.39, which is not all that much further below 47.43. Well, if we go the additional 4 points below to get 0.236 to give it a nice fib touch to it, then I'm going to be looking for an A, a B, and a C wave, and the C wave to bring it down. Or we might be in it now. A, B, 1, 2, 3, 4, and we come down in the fifth, finish it up. And instead of A, B, C, it's just A, B, C, and the C wave. I would move the minute up a degree here. If it doesn't, if we rally first, then it's an A wave here, we put the B wave here, we come down in a C wave. Still expect it to come down to there. So all in all, we got to wait to see how we're going to begin the new year. Are we going to begin it with a severe jolt to the upside? Or are we going to finish this fourth wave and then rally? Now, as I said before, I still think that I knew that the market wasn't done with this rally phase yet. And I do think that we'll complete it within the month of January, actually. We have some potential that we might extend out a little bit into the first quarter of 2024. But I don't think that the economics and everything else, as things start to smooth out and we start to get more data, I think the narrative is going to switch, from looking for rate cuts to begin in March. So the window I've heard as early as March or June, July, August. So, and it just, we saw a lot of rotation for year end. Let's see how they want to start the year. It doesn't have anything to say because I think a lot of fund managers, asset managers, portfolio managers, they build where they want to be to get into 2024. That doesn't mean that they might not have a few things that they're going to exit out and switch around or do differently. So we're still going to see, I think, a lot of just position posturing. But what will remain in focus, in my opinion, will continue to be artificial intelligence. It's almost weekly, we're getting a lot of different updates in terms of the improvements, the changes within, the different chips that are being made to support it, et cetera. And that, I believe, will continue. So the focus will likely remain there for right now. I think once we start to get more new economic data as to how things are ending 2023, how things are beginning to look at the beginning of 2024, we may see a larger correction, which I'm already anticipating. So again, I'm looking for this primary B wave to finish within the first quarter of 2024, and actually I'm thinking that within the month of January. We might get that low end, and we'll start the primary C wave. Now, taking this back out, what would my expectations be for that C wave? Well, this whole AB is going to come in, at best, it's going to be considered a flat. Even if we go up above and produce a substantial new high, it's still a flat. So at best, what are you going to do? You got A, B, and C, bringing it back down 3,800 to 3,500. Yes, it's still going to be a fairly strong drop. And if you're trading it, it's going to seem like, oh my God, the market's giving up everything. But it isn't. It isn't. Keep your big picture in focus here. A large drop in terms of a correction, it's just truly setting the stage for a very dynamic, because what we'd be completing down here, folks, is a cycle degree fourth wave. And that actually goes as well as in the NASDAQ, right? It's in both. Cycle degree fourth waves. So we still have a cycle degree fifth wave. And it should be pretty strong. It should be pretty strong. What's going to be in cycle wave five? 5 waves of primary degree. 1, 3, and 5 going up, 2 and 4 corrective. So we still have, and that's coming. But we got to get this fourth wave. We got to get that correction. We got to deal with the possibility of recession. We got to deal with the market being overbought. We got to deal with, et cetera, et cetera. We got to deal with, if we're moving into recession, if we move into a period of deflation, interest rates will come down. All right. If we're worried about inflation, what the opposite of inflation is deflation. What kind of comes back in? Rates are allowed to come down. But the byproduct of deflation is not positive. As like prices come down, if we're getting rid of inflation, then everything else gets to come down with it. So be careful about going into this narrative about lower rates, Yahoo, more people buying homes, da da da. Everything will have to make its correction. And a lot of it's going to, it's going to be within how are we pricing our equities? Are they overpriced? Are they underpriced? Are they fairly priced? All kinds of things are going to start to come out. But in any case, the Elliott course shows us that we should look for a fairly sizable continued decline. It'll come in the form of 5 waves because it's a C wave, and all C waves are 5. So it's going to look very impulsive, which it should. It's a C wave, but we can put context around it because we're seeing it come in and we know what limitations it should have in terms of depth. But initially, I think it just, boom, it comes down in a very quick 5. But if we're looking at a primary C, there are going to be 5 waves of intermediate degree, and intermediate wave 1 should be a butt kicker. So should intermediate wave 3, but intermediate wave 1 is the initial, whatever we start this decline at will be considered kind of frothy, and it'll be like there'll be a lot of shifting. In any case, I don't think it's the end of the world. I think the trading opportunities would be tremendous. I think there will be the AI sector will continue to be favored because of its growth potential. But that does not mean by any means that it will not adjust. It will not come in line. They will correct as well because everything gets blown out of proportion, so to speak. So it just corrects. It's not saying that NVIDIA is a bad company. It's not saying that Apple's a bad company or Apple's this or Apple's anything. They will continue to prepare. They will continue to work towards that goal, which is the greater use of artificial intelligence. We're already seeing that. That's not going to stop. What's going to stop is inflation. And after inflation comes deflation, everything gets brought back into line so that we can all start again. All right. So the next rally, but to start a rally from here just really keeps things in a very overbought position. And that's not healthy. It's not healthy for the economy. It's putting a lot of pressure on expectations of what these companies really have to do. And you know what we're seeing? We're going to be seeing the employment status of a lot of people. A lot of things are going to, computers and AI will replace people. So do you see how we're going to have deflation? How are companies going to be dealing with that? How are everybody, how are we going to deal with that? So there's going to be a period of, great stuff. Yeah, great companies. Yep, they're producing great products. But if we all can't participate, there's going to be a drag somewhere. Okay, enough said. I do believe that we're going to start the year. We have an upside structure to finish. And then I think once we're done, we have a larger degree, a corrective move, and I'm going to keep using that word. It is not a crash. It is corrective. And we have gone up, folks, substantially since, I'm going to back out here. We've gone up substantially since October of 2023. So in essence, this is basis the March contract. The low in October of 2022, was 37.27. We're pushing up against 48. We finished Friday at 48.12. That's 1,100 S&P dollars, right? S&P points. That's the rally that we've done in an inflationary period, in a period of war, in a period of all the things that are going on. The S&P's managed to tack on 1,100 points. So we're gonna get a correction. And basis the March contract, I'm not looking for anything, just coming back down, just correcting all of this. And we already did. You saw that. But now maybe that'll just be wave one off of wherever we top. Wave one, a 2, a 3, a 4, and a 5, and we end up back down here. Remember, flat. The whole thing from the all-time high down to there, back up and back down should be like flat. Very flat. An inside move. All right, I'm going to finish it right there so I can get this out. Thank you very much for all of the support that you've been giving me this year through just the subscriptions, just through coming in and viewing my work. I will continue in 2024. I still have not totally decided whether I'm going to flip over to memberships or not. Got a couple of other ideas in place. But I want to wish everybody a very happy and safe and prosperous 2024. I think there's going to be a lot of trading opportunity. We just need to stay open. We need to stay flexible. And we need to not be of such strong opinion and let the market do what the market does. And so we just need to be able to, if you're an options trader, you're going to be looking to play premium. That's the name of the game. And how you do premium, you're going to have to hedge it. And then you're going to have to work your trades. But I think there's going to be a lot of profit to be made, whether you're a day trader, whether you're a position trader, whether you're a swing trader. But you're going to have to stay open and not be so fixed on bullish or bearish, because both are going to happen in great detail over the next year. All right, everybody, thank you so much again. The next update will actually be on January 2nd, 2024.